Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to discuss potentially what could be an absolutely massive week, which could also determine the rest of 2022. Some real key events happening this week. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yeah, this week potentially could be what I'm calling a week of destiny. A week of destiny, because some key events have happened this week which could really determine the rest of 2022 for the markets. It really could. And let's go through all these big events, because there's lots of events this week which is going to be really pivotal to the market's future. Anyway, today for the euro, we have the EU Consumer Price Index, and that's due roughly in about 20 minutes time at 9 a.m. UTC. Expectation is for it to come in slightly lower than the previous reading, but still very, very high indeed at 9.8%. The previous reading was 9.9. Now, don't forget, the ECB raised interest rates last week by 75 basis points. So be interested to see how, obviously how inflation is doing at the moment. As well as that, though, this is going to be really worrying for the ECB. We have the EU gross domestic product coming out at the same time. Expectation is for it to come in at 0.2%. The previous reading was 0.8%. So again, this is suggested to show a slowdown indeed in the Eurozone, and an indication on when the Eurozone could fall into recession. And then Tuesday, tomorrow, we've got another big event, another massive event. Reserve Bank of Australia, their interest rate decision. Now, this is due in the morning for the Aussie traders out there, or the Asian session traders, at 2 a.m. UTC. Expectation is a hike of only 25 basis points to 2.85%. Don't forget, the RBA surprised us last month, or this month, actually, still in October, when they only increased interest rates by 50 basis points, not by 75, suggesting that they are indeed getting ready to slow down with their aggressive stance and their fight against inflation. Could this be a key to what the Fed may do? But more on that in a minute. As well as that, on Tuesday, we have US ISM manufacturing due at 2 p.m. UTC. Expectation is for it to come in lower at 50. Previous reading was 50.9. Don't forget, this is really indicating indeed that there is a slowdown in economic performance in the United States. Then Wednesday is going to be a big one. Wednesday is a real big one. A big day indeed for the markets. Because on Wednesday, we have a couple of things. First of all, we have ADP employment change due at 12:15 p.m. UTC. Don't forget, there's some people out there, myself not one of them, actually thinks the ADP is an early indication of how the NFP is going to be, the NFP number is, so how the NFP is going to perform. The expectation on ADP is to come in slightly lower than previous at 198,000 new jobs. Previous reading was 208,000. Again, are we really going to start seeing signs now that the US economy is slowing down? But that is totally overshadowed by something else, a real big event happening on Wednesday. And that is, of course, the Fed interest rate decision at 5 p.m. UTC. Now, this, in my opinion, is not the main event, okay? Because the expectation, we were expecting this anyway, is 75 basis points rate hike, which we are expecting them to do. But it's what happens 30 minutes after the interest rate decision is announced. And that is the FOMC press conference, which is at 5:30 p.m. UTC. Will the FOMC hint that they may do a pivot or might start slowing down their aggressive interest rate hikes? Because all attention is on December. November, we know what's happening. We know it's going to be 75. But in December, are we going to start to see them slow down? Are they only going to do 50? And this is going to be the very first hint of what they may do in December. This in particular is going to be massive. Absolutely massive, potentially, of course. And then Thursday, it doesn't stop there. Thursday is the turn of Bank of England and their interest rate decision. Now, this is a bit of an unfortunate timing because initially the UK government was supposed to release their new mini budget today, actually, but they haven't. They've pushed it back. It was supposed to be before the Bank of England, so the Bank of England could act accordingly. But like I said, they've pushed it back. Now, expectation is for the Bank of England to do 75, to increase rates to 3%. Don't forget, their inflation is 10.1% at the moment, which is frightening. So they are expecting to do 75. There was hope for the BOE maybe even more aggressive and do 100. But the general consensus, they're going to do 75. But I say, again, what I think will take center stage is what happens 30 minutes afterwards. And that's the Bank of England Governor, Bailey, speaking. And he will talk about his view of how the UK economy is going, inflation. Don't forget, Bank of England has already said previously in the previous press conference 2 months ago, they expect the UK to fall in recession by the end of the year. Inflation to hit 11%. Very damning indeed. So it'll be interesting to see what Bailey has to say on Thursday. Then Friday, like I said, I'm exhausted just talking about it. We got a hell of a week this week. Friday, due at 11:30 a.m. UTC, is the US non-farm payroll. Again, expectation is coming slightly lower than the previous reading at 220,000. Previous reading was 263. Again, are we going to start seeing signs of the US economy beginning to slow down? Like I say, this is really potentially a massive week for the market. It really is, because there's huge events coming up, absolutely huge. And like I say, it could really indicate how the rest of the year is going to mean to the market. The rest of 2022 can really determine the rest of the year, in particular the FOMC. If they're in that meeting, that press conference, they drop a hint that they are going to start slowing down on their aggressive interest rate hikes, then the market's going to get a boost. Don't forget, the equity market has already recovered in October from the terrible September. And if the Dow closes 2 points higher today, it's going to be one of the best months for the market since the 1930s in recovery. So this is going to be very, very key. And like I say, these events could determine the fate of the market for the rest of 2022. So yes, this is potentially a gigantic week. But let's have a quick look at the market, see where everything currently stands at the moment. Let's start off with the euro. Obviously, the euro was above parity at the beginning of last week, or at the end of last week. Again, down to like the dollar weakness. It's now back under parity. It didn't last long, did it? Don't forget, it got a little bit disappointed. Not only with the 75 basic point rate hike, that was priced in. It was more disappointed but what's said in the press conference by Lagarde. And she was pretty dovish. And again, she was pretty, she was pretty, what's the word? Bearish on the state of the EU economy currently. Let's have a look at the sterling, because sterling's had a roller coaster ride. It's settled down a little bit now, obviously, since we have a new prime minister. And obviously, we've got rid of the stupid, absolutely insane mini budget with all those tax cuts. Currently trading at 115.65. Realistically, it's capped just below the 116 mark at the moment. If we have a look at, obviously, S&P 500, like I say, doing slightly better. Definitely a lot better October. Loved October. He hated September. Currently trading at 3,883 points. Like I say, this is going to be key. Wednesday is going to be key for the S&P. It really is, and a key for all the equity market. In fact, if we have a look at gold as well, gold again, it tried to challenge that key area of interest, $1,667.86. It couldn't do so. It's currently trading at $1,639. Though we have got a slightly weaker dollar across the board, it's beginning to get some gains back at the moment. Again, we've had a weaker dollar for majority of last week, down to that hope of a Fed pivot. Don't forget, the Wall Street Journal did a report that some members of the Fed were looking at being less aggressive in December. This is what the market is hoping on. And this is what I said, the FOMC meeting, press conference is key to the future of that, as you can see. Anyway, gold currently under pressure, $1,639. Bitcoin, not really, managed to have a little bit of a boost. If you have a look on a daily, though, again, we can still see it's still pretty much in a tight range, trading just above that key area now of $20,355. Next key area of interest for me for Bitcoin is $21,937. So that's where the market is at the moment. European equities, as they currently stand, FTSE in the green slightly, 0.16%. DAX currently in the green at 0.17%. Euro Stock 50 currently trading in the green, 0.14% higher. So yeah, pretty optimistic day today. But like I say, this is a real big week ahead, a real big week. I will be doing a couple of watch-alongs. The main one, of course, will be the NFP, because I think that's going to be a big event. But I might do a minor watch-along for the Bank of England as well. And, of course, I think I've got the Trading School episode on Wednesday night, which comes out the same time as the FOMC. So I'll probably do a little bit of a watch-along with the Trading School as well. Hey, hello there. Hello, James. Looks like another exciting week for the markets. Which of these events do you personally think will have the biggest impact on the markets, or too soon to say? Definitely FOMC. Definitely that's going to be massive, especially the press conference. That's key for not just for the markets this week, but I think for the remainder of 2022. I really do. So the FOMC, I think, is going to be the key event. I'm going to be really interested in the Bank of England as well. Bank of England, I think, is something I'm going to be fascinating with. Like I say, we are expecting them to do 75. Will they surprise us and do a whole basic point, 100 basic points? Just have to see what they do. But yeah, thank you for the question. It's a good question. Don't forget, like I say, like this individual just did, you can ask me questions anytime you wish, or simply say hello if you like. Share with me your opinion on this week. Do you think this week is going to be as big as I'm anticipating it to be? Are you excited as I am? Indeed, what do you think of Amazon last week as well? Because their earnings were pretty disappointing, wasn't it? Anything, or tell me what you're trading. Not a problem. Don't forget, if you think of a question later, you can put it in the comments section, either on YouTube and Facebook. I will see them, and I will reply to them next time I go live on air, which of course will be later today at 2 p.m. UTC to discuss the US session and what's happened in the European session. It'll be fascinating to see that EU CPI reading. Will it come in at 9.8%? And obviously their GDP, which comes in again in about 7 minutes. So it'll be fascinating to see what that is. Okie doke. If there is no questions, not a problem. Not a problem. Thank you for the question there, by the way. ITI 1987. I really appreciate that. Anyway, like I always say, if you're watching me, on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button when you know, so you know next time I'm going live. If you enjoyed this video, found it interesting, insightful, and you've put up with me, my over-the-top enthusiasm, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand for entering any trade. Till next time, every single one of you, trade safe.